We are a £185 million investment fund, it's actually the largest of its nature in Europe, which is targeted at the Northwest. We're here to promote and finance the growth of SMEs, which is pretty much any business less than 250 employees. And we are targeted with investing this capital by the end of 2015.
Perhaps if we look at equity investment per se, perhaps Anthony, from your perspective, the pros and cons, etc., as you went through that.
Yeah, sure. We did it in several stages, I suppose, really. The first one was in 96 or so, when, our retail business was only 4 or 5 years old then. By 99, we had 60 stores and making about 3 million quid. And this very, very irksome competitor that had always been twice our size, and never ever made a profit in its history, got into a bit of a tangle, and there was only those two players in the market really, and there was a sort of golden opportunity then to acquire this fairly, say, troublesome but frankly financially disabled competitor. We paid 30 million and we had to raise another 40 million for store refits, etc., and distribution centres and what have you. And that really is where the equity partner came in truth. He got to know the management and seen in some detail the way that we would operate stores, and like us, agreed that we had a reasonably good chance of turning around the target business. So yeah, bit of a fan of venture capital, provided you've got the right opportunity to go with it. So don't use venture capital for an opportunity that you could finance with debt, and provided that you get on with them and they actually thoroughly understand your business.
Eugene, similar experiences, because you've done this a couple of times, haven't you?
The first time, similar time to Anthony, 97, between 97 and 2000. I got involved in a startup in the technology sector. Because it was technology, we had to invest ahead of what we were doing in terms of turnover, in terms of cash flow. There was no chance of funding it out of cash flow, because you had to build capacity to provide a service to your customers. It was business-to-business technology in terms of fixed line connections to the internet before broadband came along. Now we took private equity because we needed cash to help us to build that infrastructure, to be able to provide the service to our customers, and to be able to grow at anything like the rate that we needed to grow at, to even create a market position in a very quickly changing marketplace. Without that private equity, we couldn't have survived. As an owner manager, you have a choice sometimes, and a lot of people they are more conservative. They want to grow the business at a steady pace, take the time, grow it over a 15-20 year period, and some people think of it almost as like a family heirloom that they're going to pass on to their children. But a lot of people then look at it and say, well, that's not really for me. What I want to do is to grow a business quite quickly, to move at a much faster pace. But to do that, I'm going to need some kind of funding. Well, at the moment, certainly in the last few years, if you're going to go to a bank and say, well, I'd like some funding, Mr. Bank Manager, please, it's quite difficult.
I think that moves nicely on in terms of, it's not the only option, equity, how it can complement. Martin, maybe give your insight in terms of how you can complement that, or how, what people should be thinking about the different options that they have.
So I think firstly, fundamentally agree with the point that it is about banks working with private equity houses to support demand for growth. I can understand, listening to business owners here today, that when it's your business, when it's owner managed, when it's your dreams that rest on that money, that the last thing you want to do is go through the effort of asking for funds from any institution, whether that be a bank or private equity house, to be told at the end of it, great idea, but not the right time. The more we can work, though, with private equity houses, then the better we can provide different options.
Steve?
Yeah, I'd endorse that. I think events like this, to get the word out to business, the types of funding that are available, is key. The benefit of having an equity house behind that proposition is without doubt mega, and enhances the proposition full stop.
I found it extremely informative. As a business with sustainability, which has grown 100% year on year for the first 3 years of trading, we are looking at overall alternatives to support the core business, and the development fund which is on offer could be of consideration to us for our future expansion plans.
We've already explored other opportunities, high street banks who are here today, and export is a very difficult market for people to take a risk on, so we're hoping that what I've learnt today will help us take things forward very quickly.
It's been extremely beneficial. It gives us an understanding of what venture capital involves, the level of risk involved, partnering with the banks as a solution. And obviously the export market was particularly of interest to me in particular, because obviously we do market within international export, and it gives a clear indication of what kind of level of support and funding will be available for that particular purpose. So it definitely was a beneficial experience.